Obviously, any tax saving idea is absolutely fantastic. And essentially, when we're sat down in those year-end meetings with people, we will do whatever we can within the realms that are possible to help people with their tax savings. So obviously, we've spoken on the tax savings. What would you say is the most common mistake business owners make with tax?
I would say the most common mistake is people don't plan ahead, which it comes in again to pre-year end and planning what we're spending to help save tax, but also not physically saving any cash to pay any tax bills that may arise.
Yeah, absolutely. The amount of times I sit in a meeting and people have one bank account and I might split them out into pots. Again, talking in the past about a car mechanic invoices for £240. First of all, 40 of that is straight off to the Batman. 38 of that is straight off onto corporation tax, depending on where they are in their profit levels. Whereas actually they might just go, there's £240 for me.
Yes. And then they don't think about it until maybe the accountant gives them the tax bill, and then they have to find it. And
absolutely. That's obviously for a limited company. What about if the sole trader? What tax mistakes can they make?
I would say a similar thing, especially if people aren't aware of payments on account as well. If their tax bill goes over 1,000, they have to make payments towards the next tax year. So that may impact their cash flow, and they're not aware of that. With sole traders and limited companies, you may find where people will use their personal bank accounts or personal credit cards to use for business expenditure, which means it's easily missed. You may miss expenses, but also it's harder to keep track of spending and things. It's a lot easier to have separate bank accounts, separate credit cards to be able to keep track of
Yeah, absolutely. Very good cleanliness to keep them separate.